Hi there and welcome to a brand new edition of Who Moved the Market. I'm your host Surabhi Upadhyay, and finally making a comeback on the show after I don't even know how many months is my good friend Nigel D'Souza. Welcome back, Nigel.
Well, always good to be on the show, Surabhi, and if it's moving the market, why not?
And it is moving the market. It's a deal in your sector, and you've been telling us about it. It's been in the making for a while, right?
Yeah.
So let me quickly give headline to our viewers. Basically, what's happened is that Ambuja Cements has snapped up Sanghi Industries for a large amount of money. We'll talk about the deal. We'll break it down. But tell us why this is an important deal for the industry and for Sanghi shareholders.
Well, that's right. Surabhi, just to give you a quick background first, Sanghi Industries, they've not been able to function at optimum capacity utilization levels from the time I know it. They used to be a 3 million ton plant, which got increased to around a 4 million ton plant, and then it went to 6 million ton odd. But they've never managed to sell more than 3.5 million tons odd. So clearly the erstwhile promoter, they couldn't ramp up business and they couldn't sell all the cement that they could potentially make.
And this is a plant in Gujarat.
In Gujarat.
Important to keep
Gujarat,
in
Kutch, it's a location in Kutch, and the biggest problem for them is the distance from the plant till the market is very, very large.
Oh.
So that's why, in spite of having a big capacity, they didn't have the market to sell it in. Now for years they have been saying that they're going to be selling the cement that they produce. They have a port, so send it via ships to Saurashtra, to Maharashtra, to even Kerala and Karnataka. That plant didn't play out. Alright, so they have the capabilities, but unfortunately in the current promoters' tenure, that is the Sanghi promoters, they couldn't wrap it up. So just to give you a very, very simple example, it's like having the finest dining restaurant in a place where the property prices itself are so low.
But there are no fine diners.
There are no fine diners over there, but you have the best cook, the best chef, the best
like a Michelin star restaurant.
Absolutely.
Somewhere in a forest.
Absolutely. and there's no one to. But the thing is that if there is a new person who comes and takes it over and maybe has the expertise to somehow make that food find its way into people's homes, then things could be different, and that's precisely what's happened here. The big boy, Ambuja Cements, has gone ahead and picked up this Sanghi Industries unit, which is currently around 6 million tons of enterprise value of 5,000 crores.
Okay, so that's the first headline, the first number that we'll keep in mind. This is a deal that's been struck at 5,000 crores. But Nigel, this is also a story of Adani's growing ambitions in the cement space,
Yes.
right? I mean, in a year, there's Ambuja, there's ACC, and now there's Sanghi Industries. So tell us a little more about the deal breakup. There's also an open offer, because I think they've bought this. Today's deal basically is a chunk they've bought from promoters. Large chunk, right? 57%?
Yes, large chunk. 57% out of the 72% stake.
So that automatically triggers an open offer, because that's how the takeover code works. So another 26% they'll buy from
open market. They'll attempt to buy from the open market.
And the pricing is pretty decent. It's above the current market price.
It's pretty decent, Surabhi. So the way I'll term it is, it's a win-win-win deal.
Okay.
Win for Ambuja, win for Sanghi Industries, and win for the industry as well. Because now you have a smaller asset that's going into more capable hands. Let's run you through why it's good for Ambuja. As you said, the current capacity for Ambuja Cements is around 70 million tons. They have ambitions to go to 140 million tons.
70 to 140.
Yeah, 68
capacity.
to 140.
Okay.
On the drawing board, we already have 22 to 24 million tons.
Okay.
So we're already at around 92 million tons.
70 they have, 20 they're anyway going to add organically.
Yes, organically.
Okay.
And this will be the additional 6 million tons.
Now they get another 6.
So they go to around 96, but they also have plans to scale this unit up from 6 million tons to 15 million tons.
Oh.
So put together the currently announced plans plus Sanghi, they are at 100 million tons plus. So that goal for them to go from 70 to 140, that's well and truly on. So that's why it's good for them, and they're getting it at a good valuation. If you look at the deal, it's done at around $100 per ton.
Okay.
To set up any cement unit, you have to pay a little more than $100 per ton.
Okay.
So they're getting a unit tomorrow fully set up to run.
Up and running at the same price.
So valuation is good, and also they can add capacity big time.
Okay.
So just to tell our viewers, you have clinker, which is a key raw material to make cement. And that is in the ratio of around 1:1.5. So if you have 6 million tons of clinker, you can potentially do around 9 to 10 million tons of cement.
Okay.
But they had excess clinker. The clinker was more than the cement.
Who's the they? Adani or Sanghi?
Sanghi.
Okay.
So basically, when Ambuja takes it over, they only have to set up the cement capacity because the clinker is already there.
Oh.
To give you a fun example, you're going for a party, and maybe you're drinking the finest malt.
That's why I love doing the show with this guy. He gets the best examples.
So you have the finest malt out there, right? But you require only limited soda. The problem is, as of now, what's happening is if you require X amount of soda to mix with a larger proportion of
whiskey.
malt, right?
Oh, the malt. Okay.
But now the issue is you have excess soda, but you don't have so much malt.
Okay.
So going ahead, what's going to happen is the soda is going to be there, and now you can ramp up. You only need
The
to
malt
focus,
capacity.
You only need to focus on malt.
Uh-huh.
So that's why it's a very, very good deal.
Ah,
For
okay.
Ambuja Cements. So Ambuja Cements out of the way. We got it. It's very good for them.
Okay.
For Sanghi, why is it good? The price yesterday was 100. The open offer was 114. Simple logic, 14% premium.
Yeah.
The same stock was at 50-60 rupees maybe 6 months back.
Wow.
So the shareholders will be happy. They're getting a good
rupees,
deal.
and now imagine they're getting 114 in the
Right,
open offer.
right.
If they decide to tender.
So, exactly.
Yeah.
Second factor, why is it good for them? The erstwhile promoter could never ramp up. Now you're going into more capable hands, and everyone wants to be in better hands, right?
Yeah.
So now they have a more stable promoter. So it's good for Sanghi Industries as well, because now the true potential could be unlocked. And finally, for the industry, why is it good? Otherwise, you could have a smaller player that's undercutting the market. Maybe in fact selling your cement bag at a discount, which could hurt the other players.
Okay.
So in that way, consolidation is read positively. The only fear is if demand is not strong enough, Adani is going to go ahead and ramp up this capacity. They're talking about expanding capacity big time. So demand is something that will have to be monitored for the next few years, because you have this big powerhouse in there going to ramp up capacity. Demand needs to catch up, otherwise you have a supply-demand mismatch.
So, okay, they are going back to the drawing board. They're at about 70 million tons per annum right now.
Yeah.
As of today, they get another 6 million tons. And then, of course, there's organic expansion for Ambuja ACC and what they'll do with Sanghi.
Yes.
But roughly, this present capacity, how is it geographically spread? I mean, the reason I'm asking is that you mentioned a very important thing, demand.
Yeah.
And cement is a geographically spread out business.
Right.
So just, good to understand.
So
where
as
they-
of
where
now,
they are.
70 million tons is what, Ambuja consolidated their capacity, 68 million tons on. Out of that, 14 million tons is on the western part of the country. Alright, so this will directly add close to around 6 million tons from tomorrow, straight away, once the deal gets consummated. And also they're looking at adding another 9 million tons from here. Right, and out of that 9 million tons, 4 million tons will come up by March 2024. I spoke to Mr. Karan Adani, and he said by March 2024, we'll have the remaining 4 million tons up and running, so it will be a 10 million ton plant. It won't be a 6 million ton plant that we're referring to today.
In this calendar year itself?
Yeah, in this calendar year.
Okay,
So
that's
that told
a
you
lot of
that
expansion.
they have limestone, which helps you with clinker. Clinker's already there, and now they only have to look at the grinding unit. Getting back to example of malt and soda.
Okay, fantastic. Since you brought it up, I mean, what was your takeaway from that interview with Mr. Karan Adani? What's the sort of sense you came out with?
Few important points, Surabhi. One was, will the CCI give it a go ahead? So I asked Mr. Adani out there, that you already have a capacity. They're adding capacity at Mundra as well. That's a greenfield capacity of 6 million tons.
That's under Ambuja?
Under Ambuja.
Under Ambuja.
And now you're looking at acquiring another 6 million tons. So will it pass muster? He said, we have done analysis. We believe that we're confident that it will go through. So CCI, he says, tick mark.
Okay.
We'll have to see whether that happens or not. Second factor is, you have 3 listed entities today under the Adani Group.
Yes.
ACC, Ambuja, Sanghi. Why not bring it together?
Yeah.
He said, as of now, that's not on the table.
Okay.
But maybe at a later date, they could look at that. Okay. And point number 3, which is very, very important. Last year, you had a finance cost at Sanghi of around 250 crores with no EBITDA.
Oh,
Yeah.
okay.
So this year they're saying that in the next 12 months, in the next 24 months, beg your pardon, he's looking at taking the EBITDA per ton to 1,000 rupees per ton,
1,000 rupees per ton EBITDA.
which is at par with what Ambuja does today.
Oh.
So he's looking at ramping this up substantially. So those are the big takeaways from me. One, CCI gets a nod, no merger plans as of now, and they're looking at bringing the profitability of the asset on par with what we're seeing with ACC and Ambuja.
Like you said, it's a win-win-win.
Yeah.
And that explains why stocks on both sides are up and about. Usually in a deal, you'll have one guy falling, one rising, but here Ambuja is up, ACC is up, and Sanghi Industries is up almost 5% in a very difficult market. By the way, it's not a great market that we're in.
Yeah, and actually it's win-win-win for all of 3 of them, but I would like the 4th win. That's all our viewers. I hope this has made a lot of sense to all of them.
Absolutely, it has. I know I came away absolutely clear-headed with respect to this deal, so thank you very much. I'm sure our viewers managed to get a lot of important takeaways as well. Thank you for joining in, and we will make sure that we pull Nigel back a little more frequently on the
Pleasure.
show. Thanks for being with us. Do keep your feedback, comments, queries coming in as always. We will see you with another theme tomorrow.